If I look at the cabinet formation, I mean, I'm afraid there are some bizarre combinations. Arun Jaitley has got both finance and defense, telecom and IB ministry has gone to Ravi Shankar Prasad. What do you think of the cabinet formation and how do you think markets will react to it?
I think, there's some good and some bad. I think obviously, as you said, some of the combinations don't, on face value, seem to make sense. I think Mr. Jaitley obviously is very, very qualified and one of the best ministers. But to have both defense and finance seems too much on the plate for anyone to handle. So probably it's a stopgap arrangement. And I think the cabinet will be expanded further probably in the next couple of months. I think so. That was so there's a little bit of confusion around there. How do you have certain unusual combinations? Second, I think the market was expecting some technocrats or industry experts to be a part of the cabinet. That hasn't happened as well. So maybe again that may be something which will happen going forward. But I think the positives are the fact that no one over the age of 75. He's clearly gone against dynastic politics. No one from the BJP, at least, with a family dynasty type of situation. They've gone for some young people. So and clearly, I think it shows that Mr. Modi is clearly in charge because of the way that all the allies, irrespective of what they said publicly before the cabinet formation, all the allies have got 1 or 2 positions only each. So I think we should let's wait for a couple of months. I think the composition hopefully should work, and I think also depends on Mr. Modi. Clearly, he's going to be driving it. So hopefully, this will be an effective team that is put together.
Right, Akash, hi, morning. The NDA government has inherited a weak economy, poor investor sentiment, and limited fiscal ammunition as well. How do you think Narendra Modi government will be able to fix and tackle these problems?
Well, I don't think they're going to be able to fix things in a hurry, frankly. I think what reality is that I think they do have a honeymoon period of probably 6 to 9 months. I think investors recognize that this is that the economy is in a funk. I mean, you don't drop from 9.5%, 10% GDP growth to 4.5% unless something is seriously wrong. I mean, so obviously, I don't think investors expect an immediate, any type of immediate magic wand or panacea. But I think what they'll have to, the first step is in the budget. You'll have to see some attempts to rationalize expenditure, boost revenues. I think you'll start seeing attempts to get projects moving, attempts to get GSTs back on track. So I think it's a series of small steps which will give confidence to investors that this government's top priority is getting the economy back on track and controlling inflation. So as I said, I don't think anyone expects the economy to get back to 7%, 8% growth in the next 6 to 9 months. This is a 12, 18, 24-month recovery process. But it's a series of small steps which, on the market, the discounting mechanism. So the market will obviously move up in advance of this. So the market will look for signals like, what the budget, for example, what they do on projects, what they do on GST, what they do to better target subsidies, what they do on the retrospective tax amendments, stuff like that. So he has time. As long as he moves in the right direction and slowly rebuilds confidence, I think the market will do fine.
Akash, the new government will have limited breathing space. They will have to hit the ground running. They will have to present the budget soon. Do you think somewhere the budget will be the first big opportunity, the first big forum on which Narendra Modi and his government will really elaborate on the economic vision and what are their grand plans to really lift the economy?
I think it's important because it will set a direction and tone, right? For example, it'll give a sense of what they want to do on how will they boost revenue. I mean, clearly we need to improve revenues. Are we going to do it through bringing in GST and the direct tax code? Are we doing it through through privatization or selling PSUs? I mean, will it be a voluntary disclosure scheme as some people talk about? So clearly it will set a direction of how they're going to raise revenue and what are they going to do on the expenditure side. But there's a popular perception that while we do need to have a significant social spending on education, health, poverty alleviation, there's a common perception that most of our spending in India is either badly targeted or or just has tremendous leakages. So I think people want to see both. How do they get revenue going beyond just economic growth? I mean, how do you boost revenue, which I think will revolve with some type of tax reform. And they want to see better targeting of expenditure. So I think so the budget will give you a good signal on both. as well as their, the general orientation to economic policy. Do they reduce government involvement in sectors, stuff like that. So the budget document will be important because it will set a tone and direction for the next 5 years. Do they, will they adopt the FRBM fiscal deficit targets of 3% of GDP? Is that a target they're going to accept? Do they come clean on the fiscal numbers? Again, popular perception is the fiscal situation is far worse than is shown in apparently the numbers in terms of expenditure has been postponed and deferred and stuff like that. So I would hope they come clean on the numbers, say this is the real situation. This is what we target to bring the fiscal deficit down to over the next 3 to 4 years, and this is how we'll do it on the revenue side, and this is what we'll do to improve expenditure.
Akash, you have a preference towards regional banks and regional NBFCs. You like Federal Bank, you have a decent exposure to Cholamandal. So why is that you like some of these regional plays?
Yeah, no, I think, we've never played these sector themes things, Nikunj, we run a very bottom-up stock-specific portfolio. We don't run thematics and we don't look at sector rotation and stuff like that. So I think but the reality is obviously that if you believe that India is getting back to 7-8% economic growth, 7% at least, which I do believe it will come back to in the next 12-18 months, I think there's a huge delta there from 4.5 to 7.5% GDP growth. There are many domestically oriented businesses which have gone through a really horrible last 3-4 years in terms of order books, margins, negative operating leverage, rising interest costs, etc., negative cash flows, etc. Obviously, if the economy were to revive and recover, the delta will be maximum in those areas and sectors, right? So capital goods, domestic banks, things which have significant domestic economic sensitivity. Obviously, the delta will be greater there, and those stocks and sectors had done very poorly till in the last 3 or 4 years, except forget the last 2 months. So you will see, and those stocks were and sectors were very under-owned till recently. So you will see people flocking there and taking those stocks up, which is what you've seen. But I think you have to make a balance and see what are you paying, and and look at what is the earnings power of these companies in a normal economic environment. So I wouldn't just blindly buy economically sensitive stocks irrespective of what the price they're trading at. You've got to look at what is the earnings power of these businesses in a more normal economic scenario, and what they're trading at on that basis. If those stocks are expensive, then you shouldn't buy them. And I think there will be a time, if this sector rotation continues in the violent form that it has in the last 1 month, there will be a time when you start seeing real opportunity coming out again in the so-called more defensive sectors of IT, pharma, and consumer, because those stocks are...
Right. Akash, you also bought into SKS Micro Finance, right? What's the rationale behind that?
No, I think, to give a short answer, I think that it is an organization which is through the worst of its regulatory issues. I think I know the microfinance bill has not yet been passed, but I think it's stuck not for economic reasons, it's stuck on jurisdiction issues in terms of how many things will the RBI actually govern or regulate. I think for, the RBI is, I think, quite clear. They have laid down guidelines of what is the spread a microfinance institution can charge, what is the maximum lending rate, what is the amount of money they can give, etc., etc. And I think they've created a new category of NBFCs called NBFC/MFI. So I think the regulatory environment is far clearer for these microfinance companies now than they were. I think they have a genuinely defendable business model, in the sense that I don't think the banks can do what these guys do in terms of the granular lending they do at a very small ticket size, self-help groups, very rural effectively, and also I think the fact that CIBIL now is getting involved in giving credit scores and credit history for people taking money from the MFIs as well,